Hey, welcome everybody to our cash flow management and state of private capital webcast. Thank you for joining. We appreciate your time and attention. This is Andrew Suen speaking. I'm with our investment banking and M&A advisory practice. Joining me on the line as well is Chris Lang, who leads Moss Adams' restructuring practice. By now, we're all deeply immersed in a world of extreme volatility and uncertainty. And there seems to be breaking news every hour by the hour. And a lot of folks out there are working from home, juggling job and family responsibilities. But the fact of the matter is we are living in a new reality where COVID-19 has caused extremely uneven disruption across all sectors of the global economy. We've had numerous conversations with business owners, executives, and CFOs across many industries. And it's clear that some companies are well positioned in this market, while others are quite frankly struggling. But regardless of your business's situation, every company needs to turn their attention to proactively managing cash flow and working capital in this disruptive environment. For example, I was having a conversation with a couple of plastic packaging clients. Their customers are largely food and beverage companies selling into the grocery channel. And for them, business is booming, and they're having trouble just keeping up with demand, and they're facing questions like, does it make sense to invest in new machines to bring in new capacity? How sustainable is demand likely to be? What financing options would be available to me? While in contrast, we've also had conversations with retail companies, non-grocery retail, and automotive and energy-related businesses, and they're facing an entirely different set of questions. Things like, what is my weekly cash? How do I best optimize SG&A in the current environment? And can I make payroll, or do I have to enact furloughs and layoffs? But really, the constant across all of these situations is a need for kind of a hyper focus on cash flow and management so that you can best position your business today to succeed at the other end of this tunnel. Really, otherwise, you risk misfiring on opportunities, or even worse, the company just kind of has to fold or go under. I'm sure you've all sufficiently been bombarded with all sorts of content on the recent federal stimulus programs, including the historic $2 trillion CARES Act. Within that, there are big SBA loan programs, paycheck protection loans, student loan relief programs, child care credits. The list goes on. We won't do a lot of that detail on this program today, but these programs aimed at helping businesses and individuals are complex, they're dynamic, and a lot of professionals are continuing to digest and interpret this very dense information. Moss Adams as a whole has published a wealth of information via articles and webcasts discussing the CARES Act, discussing net operating losses, deferred payroll taxes, SBA loans, employee pension credits, and much, much more. And actually, I believe today, Friday, April 3rd, is opening day for applying for these various programs, including the SBA loan programs. So if you have any questions about the details of the stimulus programs, please visit the Moss Adams website or contact your Moss Adams professional if you have any questions about how to proceed. We've also had numerous conversations with capital providers, from the private equity universe to traditional bank and non-bank lenders, to other junior capital providers. And the fact is, private equity has amassed record amounts of dry powder over the last decade. And that investable capital is very much looking for a home. That said, the M&A landscape has shifted mightily in the last month, and the frothy markets seen just 30 days ago have cooled pretty significantly. I would not expect capital providers to just jump head in just because they have the dry powder. In markets like these, discipline and prudence will reign supreme during these turbulent times. We do expect capital providers to be much more opportunistic in nature. And in fact, we have been fielding numerous calls from what are called special situations funds that they're open for business. And, quite frankly, they've been waiting a decade to go bargain shopping. We also expect lending and private equity transactions to continue tightening, covenants to continue tightening, forcing private equity groups to use much more conservative capital structures and using a much larger equity check than maybe they've been accustomed to over the last decade or so. So in general, I think we anticipate business valuations and internal rates of return to decline as in the intermediate term here as cost of capital increases, cash flow profiles decrease, and portfolio company holding time increase. And again, I'm going to keep harping on this. Every private equity conversation we've had over the last several weeks included an aspect of being focused on cash flow management and the strength of their balance sheets. So if the sponsor-backed companies are allocating significant time, resources, and efforts on cash flow and their capital base, we highly encourage the numerous private, non-sponsor-backed companies out there to also gain control of their finances, gain control of their operations in this turbulent time. From an overall M&A perspective, deal volume has clearly decreased when you compare year-to-date March 2020 versus year-to-date March 2019. According to statistics from PitchBook, we're essentially at less than half the levels this year versus last year. We are, however, optimistic that the back half of the year will have a rather sharp snapback. And in fact, we are seeing some data coming out of China that investment activity is ramping back up, and they were a couple of months ahead of the U.S. So I think we're optimistic again that we'll see a rather sharp snapback in the back half of the year. Now, that's not to say M&A activity has fallen off completely. The COVID-19 pandemic has affected global economies extremely rapidly, and there are plenty of deals that have been in the works before that. Again, every situation is going to be different, but you will definitely want to assess your next actions depending on where your business was in that process. So if you were contemplating or even preparing for a capital transaction, as with a couple of the aforementioned food packaging clients, you'll likely want to buckle down, focus on cash conversion, focus on executing the business plan, and really just kind of ride out the storm. If you were in the market with your business, but let's say you haven't yet received any offers, you may want to reevaluate timing based on your business's fundamentals. For example, if you're a travel, hotel, or leisure business in the market, it's likely that your financials have deteriorated quite rapidly. Therefore, your view of transacting is either going to be valuation and terms are no longer agreeable, and you decided to weather the pandemic, or two, you'll view transacting as a lifeline to save the business. On the other hand, we've got a mandate in our project pipeline that was put on hold, but not because of poor business conditions, but rather the company is a cleaning products company, and business is booming, and they're working around the clock to produce, things like rubbing alcohol and hand sanitizer. Now, if you were in the market And let's say you do have an offer, or if you're fortunate enough to have multiple offers, and assuming the valuation and terms are still agreeable amid all of this market disruption, then speed and certainty of closing is likely to be top of mind for you. And if you're transacting with private equity, how's their financing package affected? If you're transacting with a strategic investor, can they move diligence expeditiously, or are they kind of hunkering down and managing cash flow and their capital base? But again, the fact is that this pandemic has caused very uneven disruption across sectors, and every business situation is going to be different. Whether for purposes of recapitalizing the business or managing through a cash crunch, the common thread among all businesses in this environment is the need for hyper-focused attention on cash flow management, working capital, and the strength of your balance. So with that, I'll hand it over to Chris Lang, who can talk through some of the specific tools and analyses to help you.
Andrew, thank you very much. And once again, I'm Chris Lang, run the restructuring practice for the company. And these are definitely interesting times, and definitely situations come up, occur, things happen. Not only with troubled or distressed companies and situations that they're put in, but also, as you mentioned, growth companies that do have cushions, companies that do have the ability and currently are doing well, whether that's in manufacturing, whether that's trucking, logistics, various other infrastructure. Infrastructure is somewhat deemed necessary. So there are lots of different aspects of different markets that are continuing to operate and continuing to not only see business, but also trying to manage what that looks like. And so we definitely want to be there and want to help out, but want to help out situations where you go in and there is more management needed. So current management of these companies are getting overwhelmed with trying to make decisions, trying to get into every aspect of their company when really lots of different things are occurring, and a lot of times in situations of change, situations of not only distress but highly moving different variables. So our goal is to help companies regain stability, give them the tools, the resources to really let them run the business, and to let us help kind of identify opportunities that may exist, scenarios of go forward-looking opportunities, and really kind of take the emotions out of it to let things come to the forefront, whether they're processes and procedures that really need to look at, really need to be tightened, and really need collaborative communication internally that on a regular basis is not looked at. And in these tougher times, cash can be king, and cash is king for most situations. So monitoring of cash, finding opportunities where you can gain cash, and going to if you have on your capital structure on your balance sheet, if you have a bank, if you have other sources of debt, other sources of capital, equity that either you can tap into or be very proactive in forward-facing with these individuals, with those stakeholders, so that everyone can work through this time of crisis, time of need. If you look on your balance sheet and you're heavy asset intensive, the oil field has the oil field services, trucking, anything that is asset intensive, you really need to look at what is the utilization of that equipment, Does it need to be so the working capital aspect, the capital expenses to maintain, but also the forward look, not only 30, 60, 90 days, but to look out 3 months, look out 6 months and say, okay, the new reality here, the new base case is X. What do we need to survive to get X? How do we go back out to our different stakeholders, whether they're vendors, whether they're customers, through the supply chain? How are we going to be affected by everything that is going on right now? And really that is putting tools in place, putting processes, procedures in place, but giving different perspectives on what can be done, and giving different tools to different people, but also helping management make different decisions and offering alternative views on decisions that can be had. So all of this kind of combines with, what are the opportunities here to capitalize on in these troubling times. You do need to take care of your employees. You do need to take care of, vendors, but how do you work with them? How do you create opportunities with them to keep going your business? And we've in this slide have kind of looked at some different opportunities in grouping of what can be looked at through these different tools that are initiated, through these opportunities of analysis, through these working of processes, procedures, but people as well. So, financial and operational aspects of it, what can be done with the company? How do you not only survive, but how do you capitalize on the current conditions? If you have something that you can potentially turn into something else to help your clients, to help your vendors or anything like that. I mean, those are opportunities that can be looked at. Do you need to offload certain assets that are not being utilized? Do some things need to be mothballed until it makes sense to turn them back on? There's all sorts of things that can be looked at here that, in good times or general standard conditions may not be looked at as opportunities. The restructuring, you kind of go in and there's got to be a plan going forward. How do we work with this? How do we do this? Maybe we shut down this. Maybe we look to, touch base with each one of our clients on the accounts receivable, once or twice a week to really make sure that everything is continuing to go strong, but also with your vendors that are really providing services for you that are necessary to keep operations going. Capital, as Andrew mentioned, capital is definitely something that can help, in different situations, different times. But there's definitely sources of capital that make more sense than others. And it's getting to an ideology. If you do need capital, or if you need to transact, or need some other type of situation to occur, rework with your banks, rework with, if you have an equity firm in there, or rework, internally with your board or individuals that own it. What are opportunities that exist? Government assistance. Do you qualify for that? So there's many avenues for that, and also, does it make sense to work any of those avenues or to pare down? Crisis management. There are difficult decisions that do need to be made. And these decisions, oftentimes, it can be clouded by emotions and can create different situations that may not be necessary to create. So it's really looking at all options here and helping put the tools in place to manage those options and give you options that are good and can be beneficial to the company. Working capital, kind of going on those lines. I mean, working capital is definitely something that can be looked at and can be worked through a different set of eyes, through a different set of analysis than you're looking at, or it could just be a third party to look at it and say, hey, look, have you thought about these aspects of your business, your daily run business, your weekly run business, that can free up some capital. Are there ways to increase what you're doing, or do you need to pare down how that looks in order to be more efficient and look at some of those synergies? So, there's all aspects of working capital, but definitely working capital is definitely needed. And even in growing companies or heavy asset intensive or various other type situations where, increase in working capital certain time periods during the year, if there's cycles, or just generally if there's older equipment that needs to be updated, maintenance, there's just a lot of different parts of the operations where you can look at whether it needs to be leaned up, increased. How do you do all that? So putting those tools in place, whether it's capital budgeting, whether it's truly analysis of certain departments, that's really how we can offer assistance. And looking at the cash need through the 13-week cash flow is a good starting basis for tools, and then going into more of the formal forecasting, budgeting, whether it's the capital budgeting or just general working capital needs. All of those are different aspects of not only how we can help, but looking at your company from a different perspective to free up some cash, to free up some capital in these times, and to give you a little bit more of a cushion. And then maybe that's going back to your bank, working with them, increasing, if you have a line of credit, increasing the limit, or reworking what some of the covenants and restrictions are. So, what we offer initially for pretty much every industry, every company is just an initial analysis to kind of look at, okay, love to help. Obviously we're here to help. We're not here to hurt or drain, what is unnecessarily draining of resources. We want to help, and we really want to give you the tools and analysis that can help you more gain control of your company in these situations, in normal situations, but really gaining back that stability and understanding internally. So, these are a list of generally what we would look for and how we would do an initial analysis in the models that we have. And, understanding that every company is different. Every company does have some similarities, but it's a living, breathing company. So, and you have that human aspect of it, so it can be different, even competing companies. So, looking at this, also, financials, operations, it all goes hand in hand together to get to where you need to be. But looking at it from a different perspective of, okay, what if this scenario, this variable, a lot of these things change. It's giving you the tool to operate and look at those scenarios and really sit back and understand where you are versus where you want to be. Kind of continue on that, common factors of the initial analysis. There's, as I mentioned, looking at the working capital, looking at the cash flow. What is your runway? Is it 30 days? Is it 60 days until you really start to hit into a cash crunch? Do you need to do the sensitivity analysis where, let's say in the downside, there may be a 50% decline in your revenues, and how is that going to affect the future, even though you're collecting based on past revenues or however that recognition occurs based on those terms of whatever those contracts are. So it's looking at that, but it's also looking at expenses. Are expenses increasing when revenue is decreasing? What are the opportunities there, and why is that happening? So that sensitivity analysis, can kind of give you a better understanding of not only break even, but also where the synergies, where are the opportunities to capitalize on now, and that does include tough decisions. Whether it's paring down of your human capital to get to what that need is, or whether it's looking at departments, looking at parts of your operations that were and are currently either out of favor or not making the money that you are. And how do you get rid of that? How do you capitalize on either monetizing that downward or upward? So there's a lot of different things that can look at: sensitivity analysis, the cash flow, the 13-week cash flow, working capital forecast. So, they can kind of work together. So various scenarios, you look at kind of putting a plan together, and you say, what are the factors that you can control? What are the factors out of your control? Whether it's global events, whether it's the current COVID virus that hits, how do you plan for that? And how are the scenarios that you're going to handle that in a crisis, in a management situation? So it's putting those plans together too, and understanding that forecasts and plans can change. It may just be now you're looking at it, on a regular basis versus, once a year, once every couple of years. And then you go into tools utilized. Obviously, different industries have different metrics, different views, different things that come into play. Whether it's looking at receivables, is it a cash basis, is it a credit card basis? Then you wouldn't really have terribly many changes in that receivable basis. Is it, more of a longer term? You get into the oil industry, you get into manufacturing. There's somewhat more defined, but it also is can be relationship based too. So those touch points, are you talking to them more? Are you working with them more? Are they working with you? You kind of get a view of, creating those touch points weekly to get a better view of what's going on and creating a better relationship, which may help in accelerating that receivable collection. Vendors, landlords, a lot of times in scenarios with economic conditions that are not advantageous, working with your landlords, if you have a landlord, to not only rework one of those payments but putting a payment plan in place that makes sense even if things get worse. And working with vendors as well. I mean, payment plans with vendors, can be a touchy subject, can be emotional, but I think most people, especially current conditions, need to work together, whether that's a continuing conversation or not. Operating cost reductions, well, there's lots of things going to operating cost reduction depending upon what you do, how you do it, but really able to look into what are your operating costs and really understanding and getting control of that. Headcount reduction, furlough, there's lots of different ways to do that, but it's also looking at what are the opportunities there and understanding that these are real people, and how do you help and be a good patron with the company. Lender negotiations, line of credit, we kind of talked about that a little bit earlier, but I think lenders are, a lot of lenders are in the same position. They're trying to figure out what to do. A lot of people are trying to figure out, how long this is going to go and how this is going to affect the longer it goes. And I think modifications, ultimately forbearance agreements. I think, maybe it's a refinance, maybe it's a credit line increase, maybe it's, a lot of different changes can occur, but I think they're more willing to listen now than in the past. And then the last point of capital raise. Andrew really touched a lot more on that, but what capital structure makes sense for the company? And, instead of looking at the old base case and looking at a trajectory forecasted of positive increases, maybe it's looking at flat or declined business operations to really get a better handle and be able to gain control. And with that, open it up again. If there are any questions, our contact information is right here, and love to hear from you, love to work with you, love to just talk. And even if it's just if we can offer some assistance initially, we're here to help. Thank you for your time.